7 years in this business, trying my hardest to get to where I got to, trading consistently, working my balls off, chasing my dreams, and then now sitting here having to explain myself as to X, Y, and Z. I'm going to record another video for these viewers, for these traders. I have to explain to them why or how I took another trade today and it was only 13 pips. Things should get easier, I'm sure. But I've been talking about these donuts every day for so long. Got me dreaming about them. And now I have to explain to everybody why I'm putting weight back on again. Peer pressure can get to you. And I promised myself 4 years ago, when I divorced my ex-wife, that I'll never, ever have to prove myself or will prove myself to anyone again. You know why? Because if you know it rocks, then that's all that matters. Forget what everybody else thinks. Live your life. You be happy. It was funny though, you know, the donut joke. And I don't want to continue it, but this thing got me thinking about donuts. But for today's YouTube video, I'm going to, instead of just talk about my 13 pip trade, and break it down. Explain a concept so that they can understand how this is possible. Well, we'll have to start recording in a minute, and then we'll explain what's happening. But that was a good donut. The rest of them, bought you later on. Now we'll get ready for this YouTube video. Beautiful cells today over there. All right, let's get started. Whoa, guys, you've been there the whole time. Wow. Did you hear what I was saying? Oh my days. Look, you know, it's the truth. It's the truth. I had a donut. It was delicious, and I'll be honest with you, talking about these donuts has just got me fiending them, and I end up having to have one. But anyway, look, let's get serious. Let's roll the intro and let's talk about today's lesson. All right, everybody. So welcome back to my YouTube channel, and today's topic is my 13 pip trade. Nah, jokes aside, I had a very good trade today on pound USD. That's the pair that I mainly trade on the 1 minute time frame. It's there in the background. You've probably seen it on my Instagram, and yeah, I'll talk about it in a minute. But I just want to talk about Monday. I finished the day 4 and 4, so a really good day for me on Monday. As I said, I risked 5% on my first trade, and then I continued to risk X amount on my other trades. Now, I finished the day 23% up on Monday. Now, I'm not saying that it's the wisest thing to do, go heavy on your trades, but I did, and it's my money, and I do what I want with my money, right? As a mentor, as somebody who should be setting an example, I'm telling you, it's not the way to go. Especially if you're trying to build a small account, or just in general compounding your account. So don't take what I said as something that you should be doing every single day. You get the point, right? Tuesday came, I took 3 trades on Tuesday. I lost one, won 2, but the one that I lost was a 1% loss. So I risked 2% on the trade, and then I end up moving my stop loss to half once price started pushing in my direction, and I lost 1% on that trade. The next trade that I took, I entered the market. The market slipped my position, and I got in a tad later, and it kind of threw me off a little bit. So I decided to, well, no, the emotions got involved, and I end up closing that trade out. So I end up finishing or closing those 2 trades, 1 loss, 1 win, but that win put me back to break even. And then my final trade was another banger. Both of them, both winners would have hit 1 to 3, but I never held them, and I end up finishing the day at 1.25% profit. So not too bad. Putting myself up to around 24.5%, 25% for the week, for the month. Today, came in, done the live session with my community, went over the pairs, was looking at GU, saw the break of the structure. I'll go over it in a minute. And I said, look, just waiting for price to stay above this level. If it stays above, I'll be looking for the retest, and then I'll be looking for that continuation. And yeah, Bob's your uncle on that one. Shot to the skies, putting me at 30% profit for the month. Feeling really good. Got a beautiful cushion. It's still super early into the month. Super early. Got the rest of this week, another 3 weeks to go. It's going to be a good month, but you know, just steady, slowly but surely, just continue building that and building that and building that. The end of the year is coming, so it's just time to focus, put your head down, make that Skrilla, make sure that you've got your plans in place, and just do everything one step at a time. And that is for sure something that I'm going to be doing as well. But anyway, let's head over to the screens and let's talk about this trade today. Okay. Let's remove this from the scene now. Okay, so this was a trade that I took today. I mean, to be honest with you guys, it's an absolutely gorgeous, just gorgeous trade. There's nothing more I can say about this trade that will just make it any more better than it is, other than the fact that it's gorgeous. I mean, the structure of this market, as you can clearly see, has been pushing up. There's just a higher highs, higher lows, higher highs and higher lows. We had a key level here in the market. 1 tap, 2 taps, 3 taps, and then we finally had a break above structure. Now, after we had this break above structure, we're just looking for price to retest this level and looking for price to continue up. Now, I just want to say this, right? When you're looking at this and you see price breaking and retesting structure, you don't know that price is going to go up. But what you do know is, based on past history, based on how a trend moves, and based on just how the market moves, there's a high chance, with the confluence that lines up with the uptrend, the break of structure and the retest, that price will continue to go up. Now, I always say this: never take a trade based on one reason. Always have multiple reasons why you enter a trade. And the reason for that is because what we do as traders is just pure numbers, probabilities. If I take this X amount of time over X amount of time, I should get this back. And if I'm using the correct risk to reward ratio and risk management, then eventually, you know, it will balance out in my favor. The reason why we wait for the eventual event is because, guess what? We have no control over what's in front of us. All we can do is just do what we know we can do. That's manage our risk and then take the trades according to our plan. Now, if you want to add more confidence to this, because I'm going to be brutally honest with you, patterns are enough. And if you scrutinize me after this for saying patterns are enough and you don't need a multiple confluence, then guess what? You're a donut. But the point is of this lesson today is to show you how you can use multiple time frames to take advantage of trades like this. So what we started off this morning looking at on GU was the structure. So the overall structure, okay? What we was identifying, you can see the arrows here as well. So I'll remove this one because this is one I just drew in. And this is what we was looking at this morning when I was on our live session with my community, right? We identified that price was doing a couple of things here. Price was failing to break this structural high in and around 29.92. Have a high, a retest of that high, a continuation. Another beautiful double top pattern that you all should be taking advantage of when it develops. And we have this rally down. Then we have price coming back into this key level. Again, there's a reaction. Now, look, if I'm looking at the structure of this market and I see that this market structure is pushing to the upside, I'm looking for buys. Obviously, I'm not going to just buy anywhere. I'm going to wait for price to break above this structure to look for that retest and that continuation, or I'm going to look for price to pull back to make a higher low. Now, let's say I picked a level in the market where that higher low potentially would have been. Here, multiple wick rejections, strong push phase, higher high has been made, and then look, we have a pullback. Now, we was a bit skeptical this morning of looking for continuation buys because we were not sure of how the dollar was going to continue to remain strong after Mr. T tweeted out whatever he tweeted out, and then the market tanked, right? So what we wanted to see the market do was create true structure, which was this red arrow here, to pull back, to do what it's doing now, actually, which is absolutely gorgeous. I mean, this is the 1 minute time frame, and this was the exact level where I mentioned to watch for price to come back. The recording's there. I can show you if you need to, but this morning, this is where we said, look for price to come back. Price has come back there. Look at this chart. We have this momentum down. Now, what does this red arrow represent? Well, this red arrow represents what could be a lower high formation. What does this red arrow represent? This red arrow represents what could be the lower low formation. Now, what we're doing is we're visualizing how the market could change from being bullish to then eventually being bearish. Now, I do apologize for the Muppet out there who's using his blower to blow leaves off his drive. If you can hear it, I do apologize, but let's just keep going. So now we see that the market has broken this level. So what we're expecting was this red arrow to see price pull back to create the lower high and then a continuation down. Do we know it's going down from this point? We don't, but can we take advantage of some of these trend movements here? Absolutely. Now, why did I take a buy? We're talking about sellers here, but why did I take a buy? Well, think about this, guys. The market moves in these phases. We have a push phase, an exhaustion, a push phase, an exhaustion, a push phase. This is for a downtrend. For an uptrend, what do we have? We have a push phase, an exhaustion, a push phase, an exhaustion, and a push phase. Now, how many phases are there? There's two phases. Push, exhaustion, push, exhaustion. Okay? Now, if the market is in a strong push phase and we reach an area or looks like an area where price could potentially pull back, what phase do we then enter before a continuation if this is going to be sell bias? I'll say that again. If the market is in a strong push phase, what is the next phase that we expect the market to print on the screen in front of us? If the majority of you are saying exhaustion, then you're absolutely correct. Now, how do you line up confluence to take a trade? Well, you may say this is counter trend trading, but it's really not. What we're doing is we're taking advantage of the momentum. Scale down to your hourly time frame, and what can you see happening here? Well, you can see structure. What could be a high, a lower high, and a potential lower high. Now, if this is a lower high based on the hourly time frame, then what should we suspect the market to do? In theory, a lower high should then develop and print a lower low. If the lower low is not formed, and then eventually we have a momentum shift, which is a break above a key level, which is still massively significant on the 1 hour time frame, what can we do at this stage? Well, we can then scale down. Once you start to see price scaling down, what can you do? Well, you can identify a push phase. What happens after a push phase? Well, you have a pullback, and after a pullback, what happens? Eventually, you'll have a higher high. What do we see on the 15-minute time frame? Well, we see a trend to the upside. So we're looking to take trades as buy bias. Keeping in mind that on the 4H time frame, we have a key level in the market where we're expecting the market to come back to for a retest before a continuation down. And that's in and around this level here. In and around this level here. Okay. So if I'm looking to take a buy based on all the confluences that I'm building up, based on the momentum, based on the structure, based on the formations, and based on the patterns, I'm expecting price to get back to my key level. Now, once I have all this information before taking a trade, what do I do? Well, I scale down to my 1 minute time frame, the time frame that I plan to enter, and all I simply do is I look for, let's remove this actually. Once I have all that information from the 4H, 1H, 30 minute, 50 minute, 5 minute, hourly, wherever you want to look for that information, what do? Well, you come down to your lower time frames. You look for key areas in the market where price is failing to break. You look for the overall direction of the market that represents what the higher time frames are doing. You look for targets where you reckon price will come back to, which is on the 4H time frame as we mentioned. And then what do? You wait for price to create structure that represents momentum, which is a break above, an area where price creates confirmation. So an area in the market where price is retesting as a pattern or failing to break below, showing strong signs that there's more bullish pressure than there is bearish. And then what do you do next? You go for your target. For mine, I had a 4.5 pip stop loss and a 1-to-3 risk reward ratio. So I'm not going to pull up my order here. It was something like this, and I was triggered in on this candle here. Okay, this is how I took the trade. And then this candle was the one that triggered me, and then eventually price just continued to rally up and rally up. Oh, there you go. There's take profit, and hit my take profit. This is incorrect. Oh yeah, obviously it's incorrect, because it was a 13 pip stop take profit, 13.5 pip. All right, so it was something like this. Okay, so this is how we took the trade. And look, I mean, this lesson may not seem like a lot for some of you, because you're like, oh yes, I understand all that, but I'm telling you, understanding something and actually applying it in your trading is two different things. Let me swing back to you. Applying it is two different things. And honestly, guys, look, I know the majority of you out there have the knowledge. The knowledge is there for you for free. I mean, just look at my YouTube channel alone. If you wanted to learn how to trade and become a consistent and profitable trader, then all the information is there for you. You have to apply it. My point in today's lesson is, when you're taking a trade, don't take a trade based on one confluence. Always look for more supporting evidence. In my opinion, you only really need 3 confluences to validate taking a trade. Then what you have to do, your job, your responsibility, is to then go and take that trade 100 times. The exact same way, without doing anything different. If you already have a strategy that works, that has a proven track record and can be backed by data, then all your job is to do is take those trades. And be patient. So the next trade you take, don't take it based on one confluence. Make sure the structure lines up. Make sure the behavior lines up. Make sure that the patterns line up, and make sure that the trade you're taking gives you the best possible outcome of best risk to reward outcome. The best possible risk to reward outcome that you can get based on your plan and based on the market and the structure that it's showing you. Hope you enjoyed that lesson, and if you did, smash that like button, subscribe if you haven't, turn on notifications, and until next time, don't be a donut.